People say you should not have any loans. If that's the case, why top industrialists in this country, despite having so much of wealth, why are they taking loans? You have 2.6 crores of worth of investment, but you have it in an illiquid property. You are saying like it will happen only after a year. What is the purpose? Assume that you have to fund for the college education. You have 5 crores with you. The cost of college graduation is 50 lakhs. How will you fund that 50 lakhs?
Typically, I would pay it because I already have the cash.
But you know how you can play smartly? If you are worried about your investments, then direct stock investment is not for you.
Around my age in India, people expect you to get married. So if someone has this kind of short-term goal, then where should they put their money into get the best results out of it?
See, my point is an idiot with a plan can easily beat a genius without a plan. I worked in IT for almost 16 and a half years to be precise. I started investing at the age of 28 and then 10 years of rigorous investing. I was able to achieve financial freedom, and my intention is to spread the knowledge and see more people achieve their financial freedom. So, Priyam, tell me what are the challenges that you're facing?
Right now I invest this much. Where do I go from here? Consistency के लिए so I have SIPs, but how do I pick new investments?
Okay.
How do I decide between asset classes and stuff like that?
Okay.
No,
All
no.
right. Good. So my point is like, don't save for your education goal. Try to go on a loan. People say you should not have any loans. If that's the case, why top industrialists in this country, despite having so much of wealth, why are they taking loans? Because they know they can effectively manage their money. Now I'll ask this question to Varsha. Varsha, assume that you have a kid and assume that you have to fund for the college education. Okay. You have 5 crores with you. Okay. And let's assume the cost of college graduation is 50 lakhs. How will you fund that 50 lakhs?
Typically, I would pay it because I already have the cash.
Correct. But you know how you can play smartly? You take a loan for 50 lakhs. Okay. Assuming that the course is for 4 years. So you don't have to pay even one single penny for the period of 4 to 5 years, right? If you had invested that money, it would have doubled, assuming a 15% return. So by 6 years, you'll have 1 CR. The 50 lakh would have become 1 CR. And from 1 CR, start paying the EMI of the home loan, which is just going to be a small portion of money from that 1 crore. The same is what I would suggest you also, Priya. So go for a loan, okay? And I'm sure this degree will make you to earn much better salary. And once you start earning that salary also, start repaying the loans as per the EMI and invest maximum portion of your money towards building goals towards your financial freedom.
Do you feel the stock market, as in buying individual stocks, is also a good opportunity, or would you recommend against that?
So one example from US market I would like to quote. Can you imagine investing in Microsoft share for 16 years? What would have been the returns?
No clue, but insane, obviously. If you
Just give a random number. I'll tell you the date. 1999 to 2016.
let's say 25%.
Okay. December 1999 to 2016 October, the stock price was flat, 0% returns.
0%.
The price did not move. I mean, it fluctuated up and down, but the price was almost the same. What's the return of HDFC Bank for the last 3 years? Just make a guess.
10% maybe. And
Less than 1%.
less than 1%.
It's in fact negative, if I'm not wrong.
HDFC.
Okay, HDFC Bank. Okay. So investing in stocks basically requires a lot of time, effort, and more importantly, discipline to handle your emotions. If you are worried about your investments, then direct stock investment is not for you, right? And even if you make returns on that portfolio, making that consistently in the long term, I would say it is not possible. I am saying it's very difficult. End of the day, it requires a lot of time. So outsource the job of stock picking to an expert and take even higher risks there in terms of mid and small cap investing, because you are outsourcing the risk of stock selection to the best fund managers in the country. For sure, you know that like your experience can no way match the experience of the fund managers who are managing the fund. So just outsource and then have a peaceful sleep every night.
Last year we constructed a house. So I chose not to take a loan because of the reason that I thought I might also get another, maybe next 5 years. So was that a right choice, not taking a home loan instead?
So how much would the rent cost in your hometown?
For 20K or something, you can get a really good house. But
Okay, and what would be the cost of the house that would be rented for 20K?
1.2, 1.3 CR.
Okay, so you're talking about 20,000 per month, and you're talking about 1.3 CR. Probably 1 CR, let's take 20 lakhs would be the down payment, 80 lakhs would be the loan, and your EMI would be somewhere around 65,000 to 75,000 approximately. Okay, so you spend 65,000 every month for a property that is worth just 20,000 of rent, and you are wasting 40,000 every month. Now, what would be the appreciation of this property over a period of time?
It might get doubled within, say, 10 to 15 years.
When your investment doubles in 15 years, you just need to know what is the CAGR of that particular investment. There is a formula called as Rule 72. If your investment doubles in 15 years, you just have to do this 72 divided by the number of years, which is 15. So 72 divided by 15 is less than 5,
Right.
4.5. Now tell me, has that money grown?
No, not at all.
Okay. So let's talk about 10 years. 72 divided by 10, 7.2 percentage.
Right.
EPF return is 7.1 percentage. Now let's say this property is 2.6 crores worth. In 10 years or 15 years from now, how soon can you sell that property?
It'll take at least a year.
Any investment that you do, the decision should be based on 3 parameters. One is if the returns are better than inflation. Two is taxation on the investment. Third is on liquidity. In fact, this is the most important parameter. When
Right.
you need money, you need to liquidate it quickly. You have 2.6 crores of worth of investment, but you have it in an illiquid property. You are saying like it will happen only after a year. What is the purpose? So
Right.
basically, it is not a very good investment option on all parameters: liquidity, yield, and returns adjusted for inflation as well.
So I actually want to build a house in 5 to 10 years. So that's one of my goal, and I don't want to take a home loan. So I want my investments to work instead of me to build my own home. So what do you think? Is that like a good decision, or should I still be focused on that goal or not?
Okay, let's try to see if it's practically possible. Okay, so what would be the cost of that house today?
From 1 to 2 CR at least.
Okay, let's take an average 1.5 CR. Okay, so in 10 years from now, assuming probably 7 percentage growth, so this property will cost you 3 CR. So 3 CR is what you need from here in 10 years. Now let's assume you accumulate that 3 crore in 10 years. So you invest that entire savings, whatever you have accumulated till then, into your investments. By then you'll be 35. Now let's assume you have probably kids in the next 1 or 2 years. In 10 years from now, there'll be 8 years. You will need funding for college. You will need funding for marriage. You will need funding for your own retirement. So at 35, you will be forced to save for all these goals from 35 within a very short period of time. So which is going to be very difficult. So my point is just think of all those goals, prioritize which is important. Some of these goals are non-negotiable, and calculate the cost for each of these goals and take actions based on priority.
Okay.
So, Raj, I have a question for you. So, around my age in India, people expect you to get married. So, if someone has this kind of short term goal, then where should they put their money into get the best results out of it?
Debt is probably an asset class that you can consider. If you have a higher risk appetite, you can consider aggressive mutual funds. There are other categories within hybrid itself. They move the allocation between equity and debt based on the market conditions. Like it can be 80-20, 20% in equity and 80% in debt, or 20% in debt and 80% in equity. These categories can be considered. Another better idea would be to make use of the existing investments, whatever you have for this goal, and continue investments in aggressive category. Use that for your long-term financial goals.
Makes sense.
Thank you.
Thank you for your advice.
Yeah, thank you. You were really helpful.
Thank you.